All right, what's going on, everybody? My name is Brendan Murphy, and today I'm going to be sharing with you a very unconventional tip that you can use to improve your risk to reward ratio without negatively affecting your win rate, which is going to lead to better trades and more money in your pocket, which is obviously what we're after here as day traders. So the tip is scaling out, but it's not done in the way that you would normally do it or the way that most people do it. You see, as humans, we are what's called risk averse. And that means we are more likely to take a risk to avoid a loss than we are to achieve an equal sized gain. And so basically how that materializes itself in our trading is people often, they make a trade. If it goes against them, they will hold that loser all the way until it hits that stop loss. Or they might move the stop loss even further away. That's the worst thing you can do. So if you're doing that now, stop and you'll have instant improvement in your performances. But let's say they don't move the stop loss. Price goes against them. They will usually hold all the way until it hits the stop loss. But if it goes in their favor and they start seeing that open profit climb, once it gets, let's say, 1/3 of the way to their take profit, they'll close a little bit of the position. They'll pocket a little bit of that money and leave the trade open so it can make more money. It goes further in their favor, pocket a little bit more money. Further in their favor, pocket a little bit more money. And that sounds like a good idea, right? While it's in your favor, take some money off the table, thus reducing risk and making sure that you have money in your pocket if that trade goes against you. It sounds good. However, what this actually leads to is a very poor risk-reward ratio. By closing parts of your position early, you're actually reducing the total amount that you win from that trade. So if you set your take profit, let's say at $200, with all of the little small profit takings you've done on the way, your average close is now looking to be about $125 or $130. So you've actually lost $70 because you started taking profit on the way up. And because you're not doing this in your losing trades, you're letting it go all the way to the stop loss. Your stop loss is still at 150 or 200 or 250 or something like that. So when your risk reward ratio would have been 1-to-1 or even 1.5-to-1, now you've reduced it to 0.5-to-1 or 1-to-1 at the max. And you haven't changed your win rate per trade. You've still got the same entry and you've still got the same final exit position. All you've done is reduced your risk to reward ratio. So what you can do, and this is why it's unconventional, is you can flip the script. Stop taking profits on the way to your take profit and start taking losses on the way to your stop loss. Doesn't that sound stupid? Stop taking profits and start taking losses. But I'm serious, this will increase your risk to reward ratio. If it was 1-to-1, you're gonna make it 1.5-to-1. And again, your exit and entry point are still exactly the same. Your win rate is the same, but now the size of your winners are now 50% bigger than the size of your losers. Because by taking small losses on the way down to your stop loss, where you would have lost 200, now you're only losing 130 or 140 or 150. If we make a trade and it's going against us, the market's telling us, hey, bad entry, buddy, this is a losing trade. So why don't we start taking chips off the table in a losing trade, listening to the market? All right, if this is a loser, I better take some money off, better take some money off, better take some more money off before it turns into a big loser. Whereas if it goes in our favor, the market's saying, good trade, good entry, this is a winner. Stop taking your chips off the table on winners. Let that ride all the way to the take profit. If it's gonna hit your take profit, it's gonna hit your take profit. If it's not, it's not. It's no good trying to reduce your risk to reward ratio to try to get a little bit extra win rate. It ends up hurting you in the process. So as I said, start taking the losses, scaling out on the way down to your stop loss, start letting your winners run all the way to the take profit, and you're going to instantly see your risk to reward ratio boosted. You're going to instantly see the size of your capital growing faster. And it is so simple, but the only reason people don't do it is because it goes against the risk-averse nature of all humans pretty much. So we think, well, that's fucking stupid. I'm not going to take losses. I'd rather take profit. But seriously, it's very unconventional, but that's what separates all of the failing traders from the professional traders. 97% of traders fail over 10 years. What do the 3% do? They don't do what the 97% do. And the 97%, they take the small profits and they let their losers run. Flip it and join the 3%. So that's everything I had for this video. If you liked it, like the video, leave a comment on maybe some other tips you might want to see. Share it with a friend if you think they'll find it valuable as well. As always, please subscribe to the channel if you want to keep up with the latest ways to improve your trading. And as always, you can find my professional services at mie.trade. Thank you very, very much for watching the video, and I'll see you again tomorrow for the next one.